I'm going to show you how I made $40,000 buying the lows in the stock market. I'm going to share with you my exact entry, my stop loss, my risk management, and the trade itself. And the point of this video is for you guys to learn my thought process so you can begin implementing these type of trades into your trading plan starting tomorrow. So let's get right into the trade and let's talk about my actual position. So I'm going to log on to E-Trade. This is where I actually took the position. This is one of my trading accounts. So I use E-Trade for core trading and long-term investing. And if you don't know what a core trade is, it is a trade where you typically hold it for 6 months to a year. So this is my core account or longer term account. I do day trading on my TD Ameritrade account. So let's go right into my portfolio. And the trade that I'm talking about is the TQQQ, which is the triple leveraged version of the QQQ. If you don't know what the QQQ is, it is the tracking ETF for the NASDAQ. And the NASDAQ, I'm sure you guys have heard it, is the top 100 technology companies in one ETF. Okay? So the TQQQ is just the triple leveraged version of the QQQ. And I'm going to show you why I chose the TQQQ as opposed to the Qs in a second here. But the main thing that I want to stress is my price paid. This is my entry price. And it is $21, okay? I am up about 7,000 on this position today. So these are unrealized gains. I still haven't taken profits yet because I'm still kind of going for a larger target on my position. But I'm already up 65%. And I made about $40,000 with this position. And I want to show you guys exactly how I found this trade and my thought process entering it. So let's go ahead and go to the charts to kind of understand how I thought this through. And first, we're going to start with the QQQ before we kind of address the TQQQ. So looking at the QQQ, I'm going to be looking at the weekly chart. I always like to look at several time frames before I am taking a trade because it gives me a different perspective on what the overall trend is with that stock. So I highly recommend that you guys use multiple time frame analysis in your trading. And I knew this was a core trade. This was kind of a longer term trade, at least 6 months to a year. So that's why I'm sticking with the weekly and monthly charts for this trade. And as you can see, this is when COVID happened right here. And after COVID, we continued the uptrend in the Qs. As you can see, we have higher highs, higher lows, and you can see the 20-day moving average below price and trending higher. And you can really see how well price is respecting the 20-day moving average during this uptrend. And that is exactly why I use the 20-day moving average. It is a directional guide. And as you can see, price clearly respects it, especially when we're in a trending market and especially when the 20-day moving average is either rising or declining. So during this uptrend, you can see how well it's respecting the 20. And once it broke down here, right, this is exactly where we topped out on the Qs in around November, December. And after that, we went into a downtrend and we began to drop. And you could see how well price is respecting the 20-day moving average during this downtrend as well. And looking at the Qs, this thing dropped around 37% between November of 2021 and October of 2022. And historically, going into this trade, I knew that it's very rare for the Qs to fall more than 40% in a single year or really in any sort of drop in general. So after it dropped 36%, in my mind, I was immediately thinking, let me figure out where I can buy this because I knew historically it doesn't drop more than 40% unless there's some, absolutely horrible financial event. So I was trying to look for a buying opportunity, but I had to kind of wait for one. So the first thing that I saw was this equal low that was created on the weekly chart, right? We could see that it bottomed out here. We retested that low, right? You can call it support. We retested this support and we, really looked like we bottomed here. We started to rally and then we retraced and we made a higher low right here. So I saw that we made a higher low, and then I also saw that the 20-day moving average, which is the directional guide that I was just talking about, was underpriced and trending higher. And through my experience, through day trading and swing trading, I know that when the 20-day moving average is trending higher, curling up and underpriced, that usually suggests that prices are about to transition higher. Let me kind of paint that picture for you. So if you have a 20-day moving average that is trending higher, right, and you have price kind of retracing to it as it is trending higher, this is called a buy setup. And this is one of the main strategies that I play for swing trading, day trading, core trading, doesn't matter. This is one of my core strategies. And this is exactly where I would actually want to enter the trade as a buy setup pattern. And that's exactly what happened here on the Qs. We ended up making a higher low here, retracing directly into the rising and curling 20-day moving average. And I saw this as an excellent opportunity to get in. And worst case scenario, I would put my stop loss directly under this igniting candlestick. And if it ended up breaking down, I would exit the position at a very small loss. And that's exactly what I did. And I performed this trade on the TQQQ. So basically, I kind of assessed and found the trade on the Qs. And I wanted to use the TQQQ because of the upside with it. I knew with the Qs that if this went back up to the highs, I'd make about 40%, which is awesome. 40% gain is great, it's significant. However, considering this was a core trade and I was extremely confident that the market did bottom, I wanted to kind of use additional risk, and that's why I used the TQQQ for this setup, and we're going to see why the TQQQ has a lot more upside. The other reason I traded the TQQQ was because the Qs is a $300, $400 security. So it would have eaten up a lot of my buying power, and the TQQQ is a lot cheaper, so it just makes more sense in terms of a buying power aspect. So let's go to the TQQQ and we'll kind of assess that. So looking at the TQQQ, it looks identical to the Qs because ultimately it tracks the Qs, right? Whatever the Qs does, the TQQQ will do. However, it is triple leveraged. So if the Qs goes up by 2%, this will go up by 6%. If the Qs goes down by 10%, this will go down by 30%. Whatever the daily returns are on the Qs, it's going to be triple that on the TQQQ. So although it has a lot higher upside than the Qs, it also has a lot higher downside. So it's really important that you share size correctly, that you really know what you're doing if you're trying to trade the TQQQ, because it is triple leveraged. It is way more riskier than the Q, so keep that in mind. But the chart is absolutely identical, and my average price on the TQQQ position was $21.08, and that is exactly right here at $21.08. So I was able to catch this higher low, and I put my stop loss right under this igniting bar. So I had about $1 stop on 2,800 shares. So I was risking about $3,000 on this position, which is a lot more than what I usually risk for a day trade. But considering this was a core trade, this was a longer term trade, that's why I was risking more. And just look at the upside here, right? If this from my entry at $21 goes all the way back up to the highs, that's 327%. And that is precisely why I took this trade. I knew this was a high risk, high reward trade, and that's exactly why I took it. However, I minimized my risk by placing a very tight stop loss right under that igniting bar, like I mentioned. So I was only really risking $3,000, and I'm already up about almost $40,000 on this position. It's obviously unrealized, so I haven't exited the position yet, and my goal is to honestly wait this out until it reaches the highs here. With the TQQQ, something that you guys should keep in mind is that time decay could actually impact the value of your position. And the easiest way to think about this is the longer it takes for the TQQQ to go back up to the highs, the less money I'm going to make, right? So if the market takes a while, 5 years to reach back to the highs, that's going to impact my position in a negative way. I'm going to lose a ton of value because it is triple leveraged. However, if the market, pumps all the way back up to the highs extremely quickly, that's going to be very, very good for my TQQQ position. I'm going to end up making actually more because of the speed of it going back up to the highs so quickly. So that's where I'm at in my position here. Like I said, I still haven't taken profits. And we still have a long way to go. I still have around, another 160%. Hopefully this thing goes up, and hopefully it'll reach back up either to the highs or, relatively close to the highs. That's where I'm going to be taking profits. But the ultimate theme here is that I knew that the market very rarely historically drops below 35 or 40%. Then I found a higher low on the higher time frames. I found a buy setup, right, which is one of the patterns that I play. And from there, I found a very nice entry with a really good reward to risk ratio. And as you can see, I risked 3,000 to make almost 40,000. And hopefully, if this gets back up to the highs, right, I'm going to be sitting on, $150,000 or $200,000 gain, which would be absolutely unreal. I'll keep you guys updated on this position, but that's exactly how I found the market lows, my thought process, during deciding to actually play this trade. And this is why I chose the TQQQ. While it has immense upside, it also has immense downside. So make sure you guys are careful when you're playing this. And this is my trade. Hope you guys enjoyed the video, and I'll see you guys in the next video. Thanks so much.